A Fed decision day unlike any other. Markets are on edge as the Federal Reserve prepares to deliver its rate verdict, and the ripple effects are already moving metals, Forex, and global indices. Gold has been holding its breath. The dollar is coiling, and major currency pairs are shifting ahead of the announcement. Coming up, a full breakdown across metals, Forex, and indices, including gold, the euro, the pound, the Aussie dollar, dollar yen, and more. The Fed is the calendar event that owns today, and the analysis is all ahead. Across markets in the last 24 hours, gold held relatively steady as traders positioned cautiously ahead of the Federal Reserve rate decision, while the dollar pulled back slightly from a one-month high reached in the prior session. U.S. Treasury yields eased off multi-month peaks as the bond market braced for the Fed's call, and sterling slipped against a broadly bid dollar. Oil surged more than 4% as escalating U.S.-Iran tensions following strikes in Iraq and a tightening crude inventory picture revived supply disruption fears. On the data front, Australian June CPI printed at 3.8% year-on-year, coming in below the 4% forecast. And the events that own today's calendar are the Australian CPI releases, and above all, the U.S. federal funds rate decision, alongside the FOMC statement and press conference. Gold has been coiling under pressure, and the trend structure remains firmly pointed lower heading into the Fed decision. The path of least resistance continues to lean toward lower levels as long as that bearish structure holds, with momentum failing to produce meaningful recovery attempts on the rallies. Euro-dollar is carrying a strong bearish structure into the session, with the trend leaning decisively lower and each recovery attempt being absorbed by selling pressure. The probable path points toward lower levels while this structure remains intact, and the dollar bid building into the Fed event keeps the pressure on. The Australian 200 is showing a strong bullish trend, with price action continuing to point toward higher levels as the structure builds constructively. The trend leans higher, and the momentum profile supports further extension, making the path of least resistance clearly to the upside. The Euro Stoxx 50 is trending with strong bullish conviction, and the price structure supports continued movement toward higher levels. Momentum remains constructive, and the trend leans firmly higher, with the overall setup favoring further gains, while the bullish structure holds. Aussie dollar is trending lower, with the bearish structure keeping the path of least resistance pointed toward lower levels. Despite the softer-than-expected Australian CPI print adding context, the trend continues to lean lower, and recovery attempts have lacked the follow-through needed to shift that structure. Pound dollar is under sustained bearish pressure, with the trend pointing lower as the dollar bid has built into the Fed decision window. The structure continues to lean toward lower levels, and the overall trend remains unfavorable for any meaningful recovery, while this setup persists. Dollar yen is trending higher with a bullish lean, and the structure supports further movement toward higher levels as the dollar holds its broader bid. The path of least resistance points upward while the bullish trend structure remains in place, with momentum consistent with extension higher. Swiss franc yen is trending lower, with the bearish structure keeping the pair oriented toward lower levels. The trend leans lower, and the momentum profile is consistent with further softness, making the path of least resistance clearly to the downside, while that structure remains active. Pound Aussie is trending lower with a clear bearish structure, as the pair continues to orient toward lower levels. The trend leans firmly lower, and attempts to recover have not produced a structural shift, keeping the path of least resistance pointed to the downside. That covers today's full pre-market read across metals, Forex, and indices. Stay sharp as the Fed verdict approaches, and be sure to subscribe so every morning brief lands before the market opens. This is general market information for educational purposes only, not financial advice.